Okay, folks, good afternoon and welcome to Best Stocks to Trade this coming week. The symbols that we're going to be going over today, both technically and fundamentally, are NKX, CMA, CCP, and we have a few ETFs as well. FAS, that's the banks, UTSL, those are utilities, and BOIL, which is a natural gas ETF. So before we get to those charts and when appropriate fundamentals, let's talk about last week. How do we do? We had a great week last week. Our inflation portfolio, which consists of positions in gold, the gold miners, silver, the silver miners, some food companies, uranium, all doing very, very well. Our options trades on earnings were all profitable. And yes, earnings season is slowing down, but don't forget, we're right near the end of the quarter. So earnings season will be picking back up. We will be very, very busy these next few weeks as we proceed into the new quarter. So if you're not currently a member, please sign up for your 14-day free trial offer to the Contrarian Trader. I went over with members yesterday on the week ahead commentary strategy session my thoughts on the overall market, where we are headed. We discussed our positions. And today we're going to talk about our focus stocks. Now, before we get to them, don't forget that we are going live tonight, Sunday Night Futures Live, every Sunday night and Thursday night. Click the link below in the video description area. You can set a reminder so that you get notified when we go live, 6 p.m. Eastern Standard Time. Again, tonight, Sunday Night Futures Live. Join us there. And this week's Best Stocks to Trade is brought to you by our sponsor, TrendSpider. Automated technical analysis using algorithms, scanning, charts, analysis, option flows, automation, backtesting, alerts, insights. All these tools that were once reserved for the big Wall Street money center banks are now available to the little guy. And that little guy sitting next to you, if you're in a day trading room, that's your competitor. And make sure that you have the same tools in your arsenal that he's using against you. TrendSpider, 35% discount code below. Take advantage of it. Let's get to the charts. Okay, we're going to kick things off first with FAS. That's the bank ETF. This is a leveraged ETF. If you don't want the volatility, simply use the XLF. Now, why do we like the banks? Well, you have interest rates that are rising. And when you take a look at this chart here, this is a monthly chart. We use a top-down approach, meaning we take a look at the battlefield from the higher level view, meaning monthly charts, weekly charts, daily charts. This way, we're guaranteed to get that 100,000-foot view of the battlefield that we're trying to analyze. And when you take a look at this monthly chart, remember, there's only a couple of trading days left in this month. This is a very bullish setup here. We were trading down below this lower band of support. These are automated trend lines. Click of a button, TrendSpider. Again, 35% discount code below. Click of a button. There they are. It's a big time saver. Bullish key reversal bar off of VWAP, off the 21-period moving average on a monthly time frame. And if we close out the month above this upper band of resistance, the banks are going up higher. Why? Interest rates are on the rise. Banks love rising interest rates. Why? Their margins expand. Net interest margins, NIM. Drilling down to a weekly time frame. You could see that last week. We had a continuation breakout after breaking out the prior week. Your stochastics, they're hooking up. They're going in the right direction now. What you read into this is that momentum is building. And you're beginning to see a breakout of the fast line on the Stokes above this upper band of resistance. Daily chart. Now, in a daily chart, we want to point out something, right? That, yeah, we had a good day on Thursday, Friday. The problem is this, is that we have resistance immediately above. So I'm not opposed to buying on a pullback, but I am opposed to buying where we closed on Friday. Why? The reason is that I'm going to be buying right into a resistance level, and I'm not managing my risk if I do that. Remember, our primary goal is not to make money. Our primary goal is to protect our accounts. So what I want to do is I want to create an alert here. No sensitivity, meaning I don't care if it's in the neighborhood of breaking out. I only care about a breakout. By the end of the business day, whatever day that might be, Monday, Tuesday, Wednesday, I want to see a breakout above resistance, long or ad. What does that mean? Well, I mentioned earlier that I'm not opposed to buying a pullback, and there's our alert, it's set. The however is, here's the alert, perhaps we get a pullback and a retrace to support. Wouldn't that be nice? So why not create an alert at support, touch bounce. In this instance, we will keep some sensitivity on. Doesn't have to be exactly at that support level. And there's our alert. We're good to go here. Now, what we also want to know about the banks as we proceed into the new trading week is, how's our seasonality? Let's check it out. This is one of the greatest widgets on TrendSpider, one of my favorites. So here we go. This is 10 years worth of data. Let's see if we have more data here. We do. Let's go back to 2008. So March is a so-so month. April improves, as does May versus March. June, we know we want to be out of the banks because seasonally it's a very weak period of time. In fact, it's the worst month out of the year, but it bounces back strong in July, which happens to be on par with October for being the best month out of the year. So we want to be out of the banks on any overbought condition by latest May. We want to look for a pullback in June and buy at the depths of that sell-off if in fact we do get one in June, and look to ride the wave higher in July, assuming that we get a proper setup. So seasonality looks strong for the next couple of months. Weak in June, very strong in July. Our stochastics on the chart are looking strong. Lots of momentum here. We're bullish on the banks. I think they're going up higher. Now, the UTSL, these are the utilities, and frankly, I'm kind of surprised that they are rallying because generally they trade inversely of the 10-year yield. And the 10-year yield is rising, yet the utilities are doing really, really good. And in fact, what we're seeing on the month for March is a major continuation breakout on the utilities. What am I talking about? Let's take our crayon out here. There's your breakout. And it's a continuation move beyond the highs of December. This is very strong price action. Volume could be a bit better, but we do still have a few trading days left to go in the month. Perhaps we'll make that up. Weekly chart. Now, on a weekly time frame, what we did last week was that we broke out above this upper band of resistance. So much of the month's gains came from the price action from last week. And so what we want to do here, we're looking for a long entry point on UTSL. So where I want to buy is on a pullback and a retest of this breakout point. We'll keep a little bit of sensitivity on. You can see it here highlighted in blue or purple, whatever color that color is. UTSL. So why is this retest of a breakout point so important? Well, technicians like me, we look for validation of what was resistance should now be support. So here's our alert. If perhaps on Monday, hypothetically, we get a pullback to the support level, we'll get notified. That will be our signal that we could scratch the itch. We could begin nibbling on UTSL with the anticipation that the shares are going to move up higher. So if I'm going to scratch the itch, I'm only going to put on a portion of my trade. Where am I going to be looking to add to that trade? Well, it's simple. Again, we take our crayon out. And in fact, I think I'm not going to set the alert on a weekly time frame because I've already cheated and I've already taken a look at where resistance is on a daily time frame. So I'm not going to use this. Let me delete this. Okay, now looking at the daily chart, you'll see that the automated trend lines, again, click of a button, And there you have it. Huge time saver. We broke out on Friday above one resistance level here in blue. The problem is that immediately above at the 42.15 mark, we have resistance up there as well. So while I'm not opposed to scratching the itch and putting on a small position on Monday, what I really want to do here is I don't want to get overly aggressive until such time as we break out above this upper band of resistance. So we'll set up our alert, and this is what you call a rules-based approach. This is how you manage your risk. You're not getting overly aggressive with your initial buy, and your strategy is to buy on a breakout. And while you're paying more, your risk is reduced because your probability of profit, because you've now successfully broken out above a resistance level, has increased dramatically. Now, the key here is that you don't want to begin buying if we get a breakout in the morning or even mid-afternoon, especially lunchtime. Never ever buy stocks around lunchtime, especially because it's really just computers that are managing the market. Anyway, I digress. You really want to wait until the end of the day for your alert to fire off, and that way you're not at risk for a head fake breakout or a bull trap or a breakout point failure, whatever you want to call it. How many times have you seen a stock rally in the morning only to fade by the end of the day? So you don't want to be a bag holder. That's the name of the game here. We are not bag holders. So always wait until you have a validation that you're about to close above a resistance level before you buy that stock on a breakout. I hope that makes sense. Volume on Friday was very good. It was above average, so we really like that here. Stochastics are a bit extended. However, they're strong, so they can continue to be, quote-unquote, overbought for an extended period of time. But just take note of this. You don't want to see these rolling over and putting in lower highs and lower lows. Then you'd want to avoid the trade. And folks, if you haven't already done so, if I could ask you to please click that like button and subscribe to the channel. It really helps me out with the YouTube algorithm. Okay, the next ETF or ETN that we're watching as we proceed into the new trading week is going to be BOIL. Now, this is a leveraged ETF, so it's highly volatile, putting you long of natural gas. If you don't want the volatility that comes along with a leveraged ETF, completely understandable, use UNG. But even if you're going to trade UNG, understand that no matter what type of ETF you use, whether it be a leveraged ETF or not, commodities are boom bust and extremely volatile. So be very careful when you trade these vehicles. Now, this is a monthly chart, and this is one of the great values that I get out of TrendSpider is that they use multi-time frame analysis as I do. And that's why when they first approached me, I was like, yo, we are on the same page with each other. We met, and that's why we are such big proponents of using their software here at the Contrarian Trader. Because in short, they get it. So beginning with a monthly chart, as we're doing with all of these charts, we have a monthly breakout. You do have some moving averages above. I don't think it's a big deal to get moving through them, especially when you have your stochastics. Take a look at this. This is what you always want to see. This is the sign of a strong commodity, stock, whatever you're trading. You're getting higher lows. And keep in mind also, what we're doing is we're breaking out of what was a downtrend is now beginning to develop into a new bull market for natural gas. And the exports of LNG out of the United States and into Europe, that's only going to continue. So this is a very powerful chart. Volume could be better. And what we're looking for here is a close above this upper band of resistance in green. This would mark a significant monthly breakout on natural gas. Now, when would I consider opening a position on natural gas? We'll come back to that question because I have one way that I would want to enter on a monthly time frame, but perhaps I can rationalize a better entry point by viewing a weekly chart or perhaps even a daily chart. So let's go to those, and if necessary, we'll come back to the monthly chart to develop a strategy for entry. Now, the weekly chart is looking awesome. So the vast amount of the month's gains came from last week. Stokes are rising. They're putting in higher lows and higher highs. This is just an awesome chart. Let's take a quick peek at a daily chart. Okay. So I don't know whether or not I would purchase here. If you're a momentum trader, I could make the argument because a momentum trader would be using a trailing stop loss order. To me, when I look at this chart, it's as if the horse has kind of left the barn. So I really want to take a look at possibly either A, selling a naked put, generating cash flow, or if I wanted to buy the common shares of BOIL, is to wait for a pullback. The question is, where is there a strong support level at which to buy? What we could do is this: take our crayon out, draw an upper band of resistance. We can create an alert here, and we could use this as an entry point from which, or at which, we could open up a trade. We'll keep some sensitivity on there. 10-minute alert. So here's our alert. We're set to get alerted if and when we pull back to support. And in fact, we're going to keep this longer than 14 days. That works. Now, what if you're long of BOIL, or if you bought BOIL on Monday morning? Where would you want to get out? Well, that's one of the other value adds that having these alerts provides you, because you have resistance right up here, and I didn't point this out. This is TrendSpider, the algorithm, pointing this out to me. Here, we'll open this up, take the trend lines off, and there you have it, click of a button. So I would want to know, if I'm swing trading natural gas, when we get in this neighborhood of resistance, because I know that there's a lot of overhead supply on natural gas. Remember, we're just coming out of a big bear market. So we're going to want to get notified of when we hit resistance. That way, on any pullback, we can get back into the long side. How will we know where there is support? Well, we have our alert here. So we want to get out up here. Ideally, we buy down here, book some profits, make them real. We want to know pretty quickly. We'll keep all these on. A little bit of sensitivity. Because remember, you don't want to wait for top dollar with a commodity, because when they correct, they correct real quick. So once you get into the neighborhood of where there's resistance, you may want to start scaling out a bit. And we'll keep this active for over a month. So we're good to go here. We know where our support levels are. Rising, good stuff. We also know where there's resistance. And if ever I want to reference where my alerts are set, it's right over here. These are all my alerts in this right sidebar. Now, let's take a look at seasonality on BOIL. I don't know how much data we have here. We'll go back as much as possible. 2011, October. That was the first month of the trade. Wow, look at this. Isn't this nice to know that as we proceed into April, going back to 2011, BOIL, or natural gas, has been up 80% of the time. It's hard to put a price tag on information like this, folks. Information like this gives you an edge over other traders. It could influence whether or not, A, you put on the trade. Are you believing your own analytical skill sets? And it could also influence the size of your position. Obviously, if you see a great setup and you're breaking out, you're probably going to get a bit bigger on the trade for the month of April than you would if you saw a great setup for, obviously, the month of February, which is the worst month out of the year. You're going to stay much smaller because seasonality is not favorable in February. So this is great data, 80% uptime in the month of April, the best month out of the year going back to October of 2011. Great data. And again, folks, if you're not currently using TrendSpider, your competitors out there, they're using these tools and they have an edge over you. So use that discount code below. 35% discount. I believe in it so much, I give it away free to our silver and gold level members. So take advantage of it, please. Okay, the next stock I want to talk about is Ccmp. This used to be called Cabot Microelectronics. I used to trade this all the time. Their options had a lot of volatility to them, so I used to love it. So Ccmp, now CMC Materials, their fundamentals are pretty good. They're number 9 in the electronic and semiconductor equipment group, which is not the best. Obviously, you'd want to trade number 1, but we have a very strong setup on Ccmp on a technical basis. So we'll go over and we'll check that out in a moment. But first, I want to go over the Investors Business Daily rankings for the company. It's got a composite rating of 86, and that's pretty good. EPS 78, not so great based upon Investors Business Daily's criteria. But one thing you need to keep in mind is that what this doesn't capture is EPS on a forward-looking basis. Its relative strength is very strong. It's outperforming the S&P 500 89% of the times. The group strength, very important to have a group strength that's either A or B. This is in the B category, and I believe rising. The shares have a C ranking on accumulation distribution, which is obviously not the best. And you may be saying to yourself, why is it that you're not walking away from this trade based upon the fact that you only have a C rating for accumulation distribution? It's not number 1 in the group, and your composite rating is really kind of midpoint to where you want to be. Well, the reason is that I like the setup, and what these ratings will influence is the size of my position. And it'll also influence how tight I want to keep my stops on the trade. Now, the beta, which is the measure of volatility, is 1.37, so there's some volatility here. And if you're an options trader, you're going to like that. Annual return on equity, very, very strong. Any read above 13 is strong. And in short, the ROE is basically a report card on the effectiveness of management. So it's clear they have a management that's focused on managing the company's assets very well. And they have a 3-year sales growth rate of 16%. But that appears to be slowing because their last quarter's sales growth was 10%. Perhaps it's a seasonality factor there, that the prior quarter is seasonally weak and they make up for it in other quarters out of the year. Not quite sure, but it's just something to keep a note of, right? We don't want to ignore these. We don't want to rationalize. All right, so we love the setup. We're not in passionate love with the fundamentals of the company. So we're certainly not going to overweight this position if we decide to execute on the trade. Let's get to the charts. Okay, so looking at this chart automatically, I love it. I love the setup here. I love the fact that we're putting in higher lows on price, and we're poised to see a continuation breakout. So would I buy the shares right here, right now? No. Why is that? Well, when I click the automated trendline functionality tool, I'm automatically notified that we have resistance immediately above. We are in an ascending uptrend channel. We have a really nice consolidation, and it looks as though we're going to challenge these resistance levels. The problem is that as we've challenged these resistance levels in the past, we've been rejected. We were rejected back here. We were rejected back here in December. And the third time here will probably be the charm. The operative word there is probably. Now, when would I begin to scratch the itch to open up a position here? Well, I'm not opposed to nibbling, to scratch the itch, so you aren't torturing yourself about seeing what appears to be a great opportunity setting up here. The key is that you do not want to get aggressive. So how you time your nibble, if you'll allow, is this way. Take your crayon out, draw your upper band of resistance. Look at this. We have broken out on the month. The however is we have a few trading days left to go. We don't know whether or not this is going to hold this breakout point on a monthly time frame. It probably will. The probabilities favor it. However, we do not trade on hope. We trade on a rules-based approach. If this, then that. What does that mean for us here? Well, if we hold this breakout, we would be okay with a nibble. Put on 10, 15% of your intended allocation of Ccmp. Then I would be waiting for validation. What would be a validation? Well, a validation would be a breakout above this upper band of resistance here, and we want to make sure that it closes there. Now, I'm not going to set the alert on a monthly time frame. I'm going to show you a trick that I use on a shorter duration time frame. So let's go to that now, in fact. Let's go to the weekly chart. And you can see here that on a weekly time frame, we have more resistance levels above. So this is concerning. I did not know these were here until I just came to this chart right here, right now. Let's expand this. So what I want to do now is I want to take those monthly support and resistance levels and I want to overlay them on top of a weekly chart. This is the power of TrendSpider and their automated trend lines, folks. Bam. In dashed line, you have your monthly support and resistance levels. In solid line, you have your weekly support and resistance levels. Now, we had broken down below support back in February of 2022, the week of February the 28th. Ever since then, we've been limping back on Ccmp in an effort to try to recapture what was support is now going to act as resistance. This is powerful data to have at your fingertips. So would I be a buyer right here, right now? By the basis of the weekly chart? No. When would I be? I would be a buyer on a pullback to this support level here. I'll use some sensitivity, not much, touch, bounce, but I also want to know if we break through. Because this, if I bought the pullback, is also going to immediately become my stop loss point. If we close down below this support level, we're going to stop out of the trade because it's a long drop down to the next support level if Ccmp breaks. And remember, in the back of our mind, we're keeping an eye on those fundamentals. We're not ignoring the fundamentals. They're good. They're not great. So disappointments can occur. So we're going to use a 2-hour alert. Actually, we'll drill that down a little bit further because we're looking to buy at that support level. We want to get notified pretty quickly. Okay, enter and the stop loss as well. We'll keep this active for a long time. We're going to have this fire off. In fact, let's bring this down to, so we're going to max this out here. And we're making this trigger 3 times. The reason is this, is that you may pull back, hit that support level once, you nibble, it may even retest it again. You could add more or just stay put, wait for a continuation, move up higher. But that third time, that third retest could quite possibly be a break of support. So we're going to keep this active for quite a while to ensure that we're notified if we break support. That's the primary goal of using this support level. Let's drill down to a daily chart, see if we can get swayed any further. The daily chart looks really, really good. You know, yeah, we were down on Friday. The however is that all down days are not made equal. We closed well off the lows of the session. Down volume was light. Stokes are looking pretty solid here. I think we're moving up higher. The key to keep in mind is that I'm going to swap out the monthly overlaid resistance levels for the weekly. Keep in mind that you have resistance immediately above. Okay? So if you're going to buy it, keep an eye on your upper bands of resistance. And I do think it's probably going to head up higher. Okay, the next stock up is going to be Comerica. We're going to talk about their fundamentals first, and then we're going to go to the technicals. This is a company in the banks super regional, highly sensitive to rising interest rates. Rising interest rates, they love it. The fundamentals are not great here, folks. So while the setup is looking pretty strong, be aware that the fundamentals aren't the best. Now, relative to the S&P 500, technically it's doing very, very well. It's outperforming the S&P 500. The shares are also under accumulation, with a PE ratio of 12. It looks cheap, but you got to really measure how that is relative to historical norms for the stock, and of course, relative to the industry average. Growth is not wonderful. ROE is okay. So this is certainly not a best of breed play, but the setup is nice. So again, this is going to influence how tight we keep our stops and our position sizing. How big of a position will we take on? It's certainly not going to be an overweight position. Now we'll begin the technical analysis by using the monthly chart first, as we've done with all of these charts thus far. And so far on the month of March, we have a bullish key reversal bar. I have a series of videos that are free. If you want to enter your email address in the video description area below, 5-part video tutorial of my top 5 favorite candlestick patterns. This is one of them, the bullish key reversal. Based upon this candlestick, would I go buying now? No. The reason is that I already know what the daily chart looks like, and I'm going to go to that in a moment. But also the fact that I can't base my buy decision solely based upon a monthly chart because the month is not over yet. All it takes is one nasty down day, and this bullish key reversal bar evaporates, much like it did back here and back here. They faded by the end of the month. And let's face it, this is not the healthiest of markets to go hoping when you should fear. Now, what I want to add on here is our automated trend lines. Again, click of a button, and you can see that this is a real handsome chart. Really, really nice. We have, at current, broken out above this upper band of resistance. We did it here in February. We've retested in March. It held. We were down below it. We rallied back, and it appears poised to close there. We're not 100% guaranteed of that. The only way we're guaranteed of that is that we wait until the final day of the month. We wait until 3:55 Eastern Standard Time in the afternoon, and if we're trading above that mark, well then, if you're looking for an investment, you'll be looking at a monthly chart, then you're good to go, lock and load, and you could start nibbling on the trade. So let's drill down further to a weekly chart, see what we have there. The weekly chart is looking pretty awesome. So what we're going to want to do here is overlay our monthly support and resistance levels in dashed line on a weekly chart. And I'm also going to add my own artistry. And I want to point out that we have broken out. We did so on or during the week of March the 14th. Last week was a continuation breakout, and we retested the monthly support level again in dashed line on a weekly chart, and we appear poised to rally here. This is the setup. Now, when do we want to know when it's time to exit, assuming that we're using this as a swing trade, which we are? We're going to create an alert up here at this resistance level on a monthly time frame. We're going to keep a little bit of sensitivity, book some profits, and we're going to have this expire after it fires off 3 times. So we'll be scaling out. Simply because you hit the monthly resistance level doesn't necessarily mean that you have to dump all of your shares. But if you keep poking around here and it's unable to break through this resistance levels, well, then that's a sign of weakness, that you don't have enough buyers out there to push it through. And you'll know if you have sufficient buyers in the waiting or participating by just simply looking at the volume bars. And the volume bars thus far on the week, they're declining. And last week we rolled in a little bit below average, but it's not going to make us avoid the trade. Now, taking a look at a daily chart, I mentioned this earlier. The daily chart provides us a perfect setup for where we would want to enter. I would not enter where we close on Friday afternoon. I would enter on a close above this resistance level. No sensitivity. All we care about is the fact that we're going to close there on a daily time frame. And that's our long trigger. We don't touch this stock until such time as it breaks out above daily resistance. We don't care if it touches. We don't care if it bounces off of it. All we care is about the close above it, rules-based approach. And there we go. Our alert is set. But remember now, we want to memorialize visually where we have resistance above. So what I'm going to do is, on this daily chart, we're going to keep our support level below on a monthly time frame. And we're also going to want to create an alert up here because this is a rising resistance level. We're going to, again, do the same thing we did on a monthly chart. Have it fire off 3 times. Touch, bounce. Because if we buy here on a breakout, we're going to want to know where there's resistance above. We want the computer to work for us. So that way you can go about your day job. CMA. Book some profits. And we're good to go here. Now, let's check out seasonality. And if I skip seasonality on any one of these charts, you can ask me tonight on Sunday Night Futures Live. And there's a link to the YouTube live stream if you want to click that bell button to get notified of when we go live. You could ask me to go over the seasonality if I haven't covered it on any one of these positions. All right, so here's our seasonality. So March is an okay month. It's 55% of the time up. However, it improves dramatically in the month of April. Again, this is great data to have at your fingertips. And this is data that goes back to 2011. We can go back further, 2001, and a little bit of a change here, but fairly consistent with the look back to 2011. So a lot of data, very powerful, great to have at your fingertips. Okay, our last position that we're going to talk about is going to be a bond fund, if you could believe it. I don't remember the last time I talked about a bond fund, but here it goes. Why do we like Nuveen, California? I believe these are tax-free. You need to fact-check me on that. What does it say here? Closed-end investing, mutual fund, income exempt from federal and California income taxes, huge. So I'm probably going to be a buyer of this, but for an investment, not necessarily for a swing trade. But it's worth going over the charts because it's an extreme oversold candidate. So I'm willing to go overweight the position because I believe you're going to get a rally in fairly short order, but I'm not going to carry that overweight position for very long. As soon as we get that pop, I'm going to sell the vast majority of the position. But the real attractive value here is that this fund is yielding 5.1% tax-free, folks. Tax-free. Where are you going to get that? So that's a huge incentive to get involved with this. Now let's take a look at the chart. Okay, so you can see that NKX hit resistance here. How do we know it's resistance? Because TrendSpider told us so on this monthly chart. So if you had an alert set up here, as we've been doing this entire commentary, you would have known to get out and you would have been saved from this massive sell-off. But now that there is just a ton of fear out there and nobody wants this bond fund, well, then that's why we're interested in it. So the question is, where do we have support below? Let's get our crayon out. We're right there. We're right there, folks. So I think we're very, very close to a bottom on this bond fund. Are we ready to pull the trigger? Yeah, we're ready. Daily chart. I skipped over the weekly chart for a reason. I really just want to know on a monthly time frame where our support and resistance levels are. We've answered that question. So now we move on to the daily chart because now we're going to talk about timing. When do we want to get involved here? Now, for the most part, I've been using stochastics for the entire commentary. I'm going to use them here, but I'm also going to use RSI as well because that's the qualifier. That's why we're looking at this fund. But before I bring up RSI, let's talk about Stokes because it's worth having a discussion about. We have a W formation or a double bottom setup on NKX. Very attractive, ready for a pop. Now you could see that on Thursday, we broke down below support, but on Friday, we were able to rally back and recapture support in red. How do we know these support levels were there? Simple. Click of a button. So I'm loving the setup here, especially if we pop our heads up above this upper band of resistance in blue. Now, the one caveat here that's concerning is that volume is still above average, so you're still seeing some institutional distribution. We liked it. That's fine. That's fine. Let them keep selling, because all the while that yield is going to increase if they continue to push it down. We know we're at historical support, and we also know that this sell-off is technically unsustainable. How do we know that? Well, time for the RSI. So in looking at our RSI is at 13.60. Now, they say in technical analysis for dummies that you should buy a stock when RSI goes down below 30. Let's validate that rule of thumb. Well, it went down below 30 right here. That was up here. That was at $14 and change. That's a big move down to $13.30 for a bond fund. So the other benefit of getting the dividend yield tax-free on this fund is that you also have a lot of upside potential, a rebound. So you can see price appreciation on the share price plus your tax-free dividend. So this is why we like Nuveen. We're going to set up an alert here. I want to know if we break through. And we are good to go. Folks, if you got any value out of this video, I would ask you to please click that like and subscribe button. Don't forget we're going live tonight, 6 p.m. Eastern Standard Time. Click that link below. It'll take you over to this page here. You can click the set reminder button. And if I've impressed upon you the value of TrendSpider, please head on over to their website. There's a link below, 7-day free trial offer. They provide great support. I am one of their partners. You can see me right here. And this application that they have is outstanding for your phone. And again, I believe in it so much, I give it away free to our silver and gold level members. And by using the link below, you get a 35% discount off of the price on their website. So make sure you use my discount code using the link below. Explore the product. They have video tutorials here, really good stuff, scanners, raindrop charting. That's their own. They own this raindrop charting. It's a great indicator of identifying trend reversals, potential trend reversal, back testing, alerts, and options activity. And I share with you seasonality. I'm surprised they don't have seasonality up here, but lots of great tools, and I would encourage you to take advantage of it. Again, 7-day free trial offer. I give it away free. Folks, have a great day, and I hope to catch you tonight on Sunday Night Futures Live. Be well.